Good morning. It's Harvey Jackson. We're just going to get into some of the news here this morning. 50% tariff on $20 billion worth of goods. And man, it's just another chaos day when it comes to Carney and Trump. They were watching the soccer, and I guess nothing really got solved there, I guess. Anyway, a lot of the same irritants that's been ongoing for I don't know how long now. American-made cars, alcohol that's been on a retaliatory tariff, and he hasn't removed them. Dairy goods, so. But of course, they kept some things exempt from this as well, like your potash and other stuff that they need, the crude oil, the natural gas, the power that we sell them as well. Here's Kate Harrison. She talks about it pretty well.
What do you make of this? I mean, he's drawing on Section 338, which is a Depression-era law to oppose these tariffs. They've never actually used this lever before. 50% tariff on a different set of Canadian imports covering products ranging from wine to hockey sticks to cement. I was reading the long list earlier on the air. Long list of alcohol. Cement is in there. I mean, it's kind of a strange list of products that are now facing a 50% tariff, but obviously they're ramping up the pressure on us. Our negotiations to this point are not bearing fruit, I guess you could say, because now we're faced with yet more tariffs on goods that matter to this country and the people that produce them. How are you feeling knowing that there's more trade action now hanging over our heads after today?
Well, it's better to be operating from a position of strength than it is under direct threat. And when you consider how bad the current tariff regime is, the Prime Minister said, this is the worst economic crisis since the Second World War. Now that we are having an addition of any tariffs, even if, to the earlier guest's point, if they might be on industries that are perhaps small, though cement is certainly not one of those industries. No. But, that is a making worse of our tariff reality and our economic reality. And I think the outlast strategy that has been deployed by the government is proving to be a failure. Some of the irritants that have been raised, dairy, auto, alcohol, those are the same list of irritants that the U.S. raised at the outset of discussions. So we can continue to twist on every Truth Social post and try to make the moral argument and get really caught up in the rhetoric of the day. But really the negotiating position from the U.S. on those key irritants hasn't changed. They're the same things that Canada was willing to play ball with back in October. And so the Prime Minister needs to be asked pretty clearly now, what is the strategy, what is the approach now that we've got effectively a political crisis and an economic crisis ticking over our heads?
Yeah, she nailed it. So this was overnight here, so I just clipped it because it's how things can change from overnight to now. But so corn, soybeans decline as crop ratings top expectations. You can see that my head's in the way here, obviously, but whatever. The expectations on corn actually changed by 1 percentage point, and you can see where the corn has grown, of course, as well. And there's the most high producing areas are in the middle here as well. Same thing with soybeans. It actually increased by 1 point. Wheat actually decreased by 5, and so this could actually have an impact on the market as well. IMF says oil prices weak. Monsoon poses big risk for India's GDP. So you got just the cost of energy. It's just going to be a big issue. But the reason I clipped this was the monsoon, and there's still 45 to 50% of all goods produced in India is for farmers, by farmers. So yeah, there we are. If monsoon actually impacts it, it's going to be a big deal. Prices firm after investors weigh fresh attacks. So late yesterday there was a proposal put on the table for a 10-day ceasefire, and the markets didn't really pull back a whole lot, but it did pull back some. And here we are. It just that did not happen at all. So now the market is gaining in strength here. So another interesting, or not interesting, but Houthis announced Saudi naval blockade threatening new front of U.S.-Iran war. So Yemen's Houthis declare maritime embargo on Saudi Arabia. More follows sign of diplomatic efforts to de-escalate conflict. U.S. missiles hit several Iranian cities, Iran media reports. Iran hits a couple tankers in the Strait of Hormuz. Kuwait desalination plant hit again. But what I want to point out is the Houthis are basically called on to this war, which is basically an extension of Iran, and it's meant to choke off that port or the strait there as well, because Saudi Arabia has a pipeline that's going across their country and quite successfully been shipping a fair bit of oil out of that area as well. And there's been some shipping going across this way as well, basically bypassing the strait as well. Quick look at the weather here. So you can see that there's some cooling that's happening, but we'll show it in a later map here. That cooling is actually changed from yesterday's map. Just in the week basis. So accumulated precipitation, you can see that this is my area that I kind of spend a bit of time in there, but man, oh man, basically the Yellowhead corridor is very wet and got lots of problems in there, of course, as well. But, the rest of the area definitely has some closer to normal precipitation. You can see that there's some weather building. There's actually a tropical storm that's hitting. It looks like it's going to be hitting Texas in the next day or two. So you can see here as we play this, you got this cooling going south here, basically going through the country. But by the time you get to the end of the month here, the whole country looks hot. So, and I think that's the market will react to that. So canola, it had actually jumped yesterday. It was a very lagged. The soybean gapped yesterday. I talked about that, and then canola finally jumped up as well, trying to trade alongside soybeans. So, but there's maybe some other actions we'll be talking about here. So canola is up just fractionally at 8.11. Rapeseed is up $2.25, so 5.59. Soybean oil is basically unchanged. Crude oils. Both the West Texas and the Brent are up $0.75, so 83.20 for West Texas, and Brent is just shy of $90 a barrel. Soybeans are up a penny and a half at 12.27. Spring wheat down, and I'm not certain whether we're going to have a bounce here. We very likely could here, just based on crop conditions as well, because it's the only one that moved by 5 points, not just 1 point. Canadian dollar down. So here we are. So I'm going to start with soybeans because that's what canola is following. So we're following the crop, and that's the major crop that we're we're following at the moment, and European rapeseed as well. But this is a pivot point extension, and it's you can see that you're making lower highs. The market actually traded to it and has not traded through it. So if it trades through, we'll be looking at higher highs here. So here's the canola futures. We traded through. But when you look at it on the US dollar side, it didn't actually trade through. It kind of went to the same value as before and then failed. This is how canola is bought. It's bought in US dollars. Here we are looking at European rapeseed, and I'll spend a little bit of time here because we made higher highs than we did back in the fall of 2024. And we'll see if this continues. I swear there's something going on with the European rapeseed crop, and if it does continue, you're going to see some other areas where it could actually have some minor support or minor resistance, but ultimately that's the high, but that's a pandemic high too. So soybean oil up against some of the resistance here. So your old support is basically now resistance for this market to go up. So we'll have to see if this stalls it. It's above your 200-day moving average, or sorry, 100-day moving average, and we'll have to see if it will continue through there. Canadian dollar. Oh yeah, there's elbows up Carney there. Yeah, it actually elbows down. It looks like. But anyway, just get into the wheat. You see the wheat is kind of faltering here, so we'll have to see how it actually trades when we get into open market here for Chicago. But we've had a couple of red days here. Got above the 61.8 retracement value, and that is an important area where if it can continue to trade through there, it'll go higher, but this is exactly the area where a lot of times it actually fails. It gets to 61.8 and then pulls back. Here's your Kansas, and your Kansas is pulling back as well. Still uptrend, of course. Same thing with your Chicago. So when you look at your European, we made higher highs a long time ago, and we're looking all the way back to the same kind of timeline as the European rapeseed back into the fall and early 2025 highs that were made. So if we look even farther back, we've got another point of resistance would be another, let's call it $25, $20 higher. Your corn futures, nice uptrend, but it's in that 61.8 area that it didn't want to trade through as well.